Okay, all right. Welcome, everyone. Thanks for joining us today for our Lunch and Learn on Frac-Enomics. For our May Lunch and Learn, we have Professor Todd Potts. Todd received his PhD in economics from the University of Georgia in 2002, and he has been a professor at the Department of Economics at IUP. Currently finance and economics since August of that year. His fields of interest are time series econometrics. I don't know if I can say
Econometrics.
Thank you. Also, energy economics and monetary economics, applied macroeconomics, and sports economics, which I think is kind of cool. He teaches classes in principal macroeconomics, principles microeconomics, and economics of sports, monetary economics, lots. So he is an economic expert, and we today are going to talk about the economics of fracking, so Frac-Enomics. And thank you so much, Todd, for being here today. We're really excited to have you. Thank you to the people that are tuning in. We actually already have 2 people watching our Lunch and Learn, actually 4. So thank you so much for that. And yeah, I'm going to go ahead and take it away, Todd.
Thank you so much, Jillian. It's dangerous to be talking about economics after you've eaten because it makes you very tired. And so I hope that I don't induce any naps today. As an economics professor, I'm used to that. It's like my superpower. I can put a room to sleep in 15 minutes or less. I'll try to not do that for you guys. Yeah, so today what we're going to do is talk a bit about actually a paper that a colleague of mine, Dr. David Yerger, and myself authored. And I'll go to my slides now and just go ahead and let's see, get going. So actually, can you see these slides? Are we good?
You need to click to the next one.
Okay, we're fine. Okay, but you're good. You can see everything now, right? We're good?
Yep.
Okay.
Yep, I can see it.
So this topic is really Quebec's fracking restrictions, squandered opportunity, or prudent conservation. Yeah, that's Quebec, like in Canada. So you may wonder what this has to do with Pennsylvania, but it is relevant. We do tie it in. This article first appeared in a peer-reviewed journal, the American Review of Canadian Studies, a few years ago. I think it was 2020. For Dr. Yerger and I, David and I, authored. The primary subject is not Pennsylvania, but we do draw a comparison to the heavily fracked area in northeastern PA. We do have a current research project on the impact of fracking on county level employment in Pennsylvania. And I thought originally I was going to present that paper to you all today, but I'm glad I'm not, because that paper is currently under revision for a different journal, and we're still kind of finalizing the results. I think it's probably not appropriate to really discuss those results until those are finished completely. Now, what does this paper do? So this paper sets out to determine whether or not Quebec's decision to ban fracking in 2018 led to either lost wealth or lost job creations. And by the way, I apologize in advance. There may be typos on these slides. I kind of put these together quickly to get to Jillian, and then I went through them today and found some typos. So any errors on here are definitely mine. So, okay, we have Quebec. It's a province in Canada. And Quebec, actually in 2018, banned fracking. And so this paper we published in the American Review of Canadian Studies to examine whether or not there was a substantial loss in job creation or loss in wealth from their decision to do that. And then what we do is we kind of compare to kind of see what Quebec may or may not have lost. We sort of we compare what happened in northeastern Pennsylvania to kind of bordering areas in New York State, because New York State banned fracking and PA did not. So you had a PA area and a New York area and then a line, right? And on one side of the line, fracking was not banned. On one side it was. And we kind of were estimated to see, like, was there any net gain in PA counties relative to those New York counties? And then we applied that to Quebec to kind of see what Quebec may or may not have lost by banning fracking. That's kind of what the paper sets out to do. And I'll kind of get to the key here, our key findings. We find that Quebec's job losses from fracking prohibition is quite modest. So in our findings, Did Quebec potentially lose jobs from fracking? Maybe, but if so, they're quite modest. And furthermore, allowing fracking in Quebec may have well led to an actual decrease in wealth. If they would have let fracking happen, we would have seen a fall in wealth for their citizens due to the subsequent drop in natural gas prices. Okay, so we're trying to see, did they lose jobs, and was there any appreciable loss in wealth from banning fracking? And we're kind of saying that they lost jobs, it wasn't many, and they probably didn't lose much wealth either. And we'll explain how we got to that conclusion here in these slides. Now, while future shale gas development in Quebec is possible, the weak profitability prospects of the shale gas sector, along with the ongoing price reductions for solar and wind power, makes it most likely that Quebec's Utica shale gas reserves will remain undeveloped. And we think that's in all likelihood a sound policy decision. Okay, so, we kind of did this for this journal, and we kind of came out with the findings that Quebec probably made a very wise choice in banning fracking. Basically, we're going to see that the benefits of it probably did not outweigh the cost of allowing it. Okay, a little bit of background. Some of you watching, if you're interested in this, you may know some of these facts. Let me give you kind of a bigger picture background on fracking kind of in the U.S. in recent history at least. It's no doubt that American natural gas production has really been transformed by the expansion of fracking. Natural gas production peaked at 24.1 trillion cubic feet in 1973, and then declined slowly, and then recovered back to about 23.5 trillion cubic feet in 2006. So that's pretty flat for a long time. Fracking then accelerated, and U.S. production jumped over 42%, all the way to 33.4 trillion cubic feet over the next 10 years. And those gains are overwhelmingly from fracking in shale gas reserves. Shale gas is this thin layer of rock, and then fracking allows them to kind of go in, turn horizontal, and extract the material. Over half of the increase in national production occurred in our state in Pennsylvania, whose production rose from 0.2 trillion cubic feet to 5.5 trillion cubic feet from 2006 to 2017. So a big run-up in production in PA, which led to over half of the national increase in natural gas production for the country. So PA became a gigantic player in natural gas nationally. Obviously, our experience here in PA with the fracking boom was closely watched by both proponents and opponents of fracking in New York State and Eastern Canada. They were seeing what was happening here, seeing our job creation or lack thereof or whatever, and kind of examine if it was going to be good for them. And what this paper that we wrote did is it utilizes differences in employment growth between shale gas border counties in PA and New York from 2000 to 2018. And we use that to generate plausible estimates of potential employment gains for what would be the core Utica shale drilling region in Quebec. So we're kind of saying, well, look, here's what PA did relative to New York, where one state could frack and one could not. And then we kind of apply those gains to Quebec to see what Quebec may have missed out on. And we also present evidence on the potential magnitude of shale gas wealth not captured by Quebec due to the fracking prohibition. So in addition to job loss, we kind of get an estimate of wealth. Was any kind of wealth loss for the province by outlawing fracking? So that's a little bit about our really brief overview of our kind of recent history in the U.S. How about in Quebec proper, in the province? In 2007 in Quebec, we began seeing their first exploratory wells be drilled. And in 2007, 31 had been drilled by 2010. And mostly this was non-controversial, and media coverage was quite modest. Now, in 2010, you started seeing environmental groups mobilize. And as the year went on, you started seeing more critical media coverage of fracking. And the most common negative aspects were too much uncertainty around fracking to permit future drilling and the risk of contaminated drinking water. And then the provincial government charged the BAPE. Suffice it to say, that is a provincial environmental agency. Nobody wants to hear a southern man butcher French this morning or this afternoon. They charged this environmental agency of the province with completing an initial assessment of Utica fracking, and its first report was published in 2011. So it's like, okay, they started doing some exploratory drilling. It was a little bit quiet at first. 2010 progressed, and progressive environmental groups began mobilizing and kind of getting this out there more. they were raising the red flag about the uncertainty and contaminated drinking water, and then the provincial government charged their environmental agency with doing an initial assessment of fracking this region. And we're Marcellus Shale. This is a different formation. Okay, and they published a report in 2011. Now that report emphasized the uncertainties involved in assessing the costs and benefits to Quebec from fracking. That it wasn't just clear cut; it was complicated. This report contributed to a provincial decision to place a fracking banning. They put a moratorium on new activity in 2011 until they better understood the risk. So this is great. This is a cautious approach, right? They had some exploratory drilling happening. People began kind of saying, wait a minute, we don't like this. They then got an agency in to study it, and they said, let's pause all activity until we learn more. So that was the moratorium. The environmental agency, the BAP, released 2 different reports in 2014, and the main points being, 1, that fracking will in all likelihood raise greenhouse emissions. 2, there is a long-term risk of bioaccumulation, right? Accumulation in our bodies of fracking chemicals. And then 3, that, okay, so are there jobs? Maybe, but there could be negative external effects on local communities. Congestion, property depreciation, air and water pollution, etc. In economics, we talk about externalities a lot. An externality is when 2 people engage in a transaction and it affects a third person that may not be part of that transaction. So with fracking, there could be significant negative externalities that it kind of affects everybody around you potentially in a negative way. And it's not just the health concerns. It could be property depreciation, congestion. Others have studied increases in crime associated with lots of people coming in from outside the area who may not really have any kind of sense of civic pride about the area, maybe engaging in risky behaviors. So they kind of talked about these different things, and they had these reports that came out in 2014. All this finally led to the Petroleum Resources Act in the province being passed. This BAP report pointed out it would be impossible to completely mitigate the risk I just reported. These reports kept the moratorium in place all the way through December 2016 when this PRA, the Petroleum Resources Act, was passed. What this did was it completely reworked Quebec's oil and gas regulatory structure to ensure the security of individuals and their property, to protect the environment, and to optimize oil and gas production while still meeting the province's greenhouse gas reduction commitments. Okay, so this was is a good act, I guess, but it sort of didn't please anybody. It was kind of a compromise. The pro-drilling advocates were unhappy, of course, due to all the increased regulations this PRA created. But by the same token, fracking opponents were also upset because the PRA did not specifically prohibit fracking. So they still allowed it, they just put other regulations in place that these firms had to meet. But it was kind of one of these compromises that didn't make anyone happy, which, that happens most of the time. Ultimately, though, Quebec ended up saying no to fracking completely. And in 2017, we saw a set of draft regulations related to the PRA that was released, and it was really strongly criticized for not sufficiently protecting Quebec's water resources. And in response to growing criticism from fracking opponents, in June 2018, the province amended the regulations so that fracking for shale gas would just be banned. So in 2018, they just said no, they're banning fracking completely. And several other restrictions on oil and gas drilling were also imposed. So that's the background. What this paper then set out to do is say, okay, was this prohibition of fracking optimal for Quebec? How many jobs did they lose from this prohibition? How about foregone wealth? Okay, so that's what we kind of set out to examine. I hope you're with me so far. So I want to first talk about the value of foregone wealth. Now look, this is a paper that was published in an academic journal meant for other economists to read. Sorry, there's a siren going by my home. What I'm going to try to do, though, is not get into much of the math here because I'm not sure of the audience, right? So I'm going to try to stay pretty basic with the mathematics involved and keep things as simple as possible. That's not meant to sound condescending. I teach it for a living. I understand that not everybody in the room is brushed up on some of the math. So this is going to be pretty basic. What I want to do, though, is kind of estimate the range of wealth that maybe could have been generated from development of Quebec's Utica shale gas. The smaller this figure, the greater the odds that Quebec's restraint on large-scale fracking was the best decision. So if we come up with a number that's small, right, that means that the estimated wealth was low, and that it's probably a good idea to ban fracking, because it's not like it's generating lots of wealth for the province, okay? And the way we chose to think about this is through the classic theory of the firm. If you take any basic microeconomics class, you may have seen this. And what this is the perspective where you kind of take the value of the reserves in the ground and you think, what is this thing worth? Well, what it's worth is the sum over time of the net present value of all the operating profits you would have got from extracting it. So you want to think, the next slide has some math on it, but for now, you want to think about this like an annuity, right? So if somebody promises you a series of payments over time, there's a way you estimate what that series of payments over time is worth today in one value, like one number, right? You're probably familiar with this, like you might have a pension or Social Security or something like that, and it's a series of payments over time. This says, well, what is the value of that now? So you have to take a flow over time and then discount that back to the present and place a dollar value on it. And that flow of payments over time, we're saying, is equal to the profit that someone would get if they dug the natural gas out of the ground every year for the next 2.5 decades. Okay, so, oh, I see my math is not showing up. It's probably for the best. So there's a formula up here, which you really can't see, probably because it went into Google Slides instead of on what I wrote it on, but that's okay. Basically, what we're saying is there's a quantity that gets produced each period. And each period we denote with the letter T. There are N periods over time. We assume there are 25 years that it takes to pull the natural gas out of the ground. That's based on other estimates. So each year they pull gas out of the ground with fracking, and they do that every year for 25 years. Every year you pull gas out of the ground, you could sell it for a price of P. That P may vary over time. So P sub T means the price in a given period. But that gas isn't free. You have to pay to pull it out of the ground. You have to pay to drill a well. You have to pay to maintain the well. You have to pay labor, all this stuff, right? So there's a value you can get for selling the natural gas minus the cost of extracting the gas. So the price minus the cost is the profit of pulling the gas out of the ground. But that gas is pulled out of the ground every year for 25 years into the future. So we have to use an interest rate to then discount that back to today's value, right? Like if interest rates are 5% per year and somebody promises you $105 1 year from now, that's equal to $100 today. So like if rates are 5%, $105 a year from now is equivalent to $100 today. And the higher the interest rate is, the lower the present value is. So once again, here's kind of our basic assumptions. We assume that it takes 25 years to exhaust the gas reserves in the shale region that Quebec sits on top of. We assume that they pull the reserves out in equal amounts every year over 25 years. The total amount of natural gas in the Utica Shale Reserve that Quebec sits on was assumed to be 31 trillion cubic feet. We got that number based on estimates by the U.S. federal government on the size of the technically recoverable reserves in Quebec's portion of the shale formation. This implies an annual production of 1.24 trillion cubic feet for 25 years. Okay, so it's like every year we're assuming they're pumping out 1.24 trillion cubic feet of natural gas. If you divide that amount by Quebec's population, it gives you an annual per person production of 147.6 thousand cubic feet per year. Okay, so it's kind of like saying each person gets 147.6 thousand cubic feet of natural gas per year for 25 years. We then convert that to metric million British thermal units because that's how you match the cost and price data that gets reported out there in the data, in the literature. Okay? We assume a cost of $4 per MMBTU. That's based on a study by Berman in 2019. He notes that in our region, the Marcellus Shale region, when prices fall below about $4 per BTU, this represents that you start seeing a reduction in rig counts. So it costs about $4 to pull it out of the ground, because once it gets below that, people start shutting it down. The interest rate we're using should reflect long-term borrowing costs. At the time of the study, the rate on long-term Canadian bonds were in the 2.5% range, and similar Quebec bonds were 0.5 to 1% higher than that. It suggests a range of about 3 to 4% for the relevant interest rate. For what it's worth, today Canadian bond yields are about 3.5%. Okay. And the following table I'm going to show you represents our estimates of the value of reserves per person for interest rates ranging from 3 to 5%, and for natural gas prices ranging from $3 to $5. Okay, so if you're still with me, I'll go to this slide, then I'll take a little break and see how you're doing. So this is directly from our paper, Table 2. We estimate Quebec's per person net present value of the wealth, right, from Utica shale gas production. So these are for various prices of natural gas and for various interest rates in the economy. So the higher the market price of natural gas, then the more valuable it is, and the more potential wealth one would have if they had access to this gas. But the higher the interest rate, the lower the value is, because this stuff comes over many, many years. So a high interest rate means something well in the future isn't worth as much today, because you're missing out on interest. So what we're finding is that, of course, prices have to be over $4 per unit for it to be profitable at all. Okay? If it drops below $4, it's actually not profitable, because that's our estimate of the cost of drilling natural gas out of the ground. As you can see, these numbers are not that large, which we'll get to in a moment. So how is everybody? Jillian, how are you?
I'm doing okay, yeah. And we don't have any questions in the chat yet, although I've been writing down,
Everybody's asleep. No,
I've
I'm
been
kidding.
writing some questions down as you were talking, but some of them were
Sure.
answered, so I think we're good.
Okay. All right. I'm going to have a little sip of my sparkling water.
Yeah, yeah. Um, one question that kind of came to mind, you may have answered it. How much of Quebec could be fracked? And I don't know if you've compared that to how much of Pennsylvania could be fracked. Um,
Oh, that's a good question. So yeah, I forget, like, in terms of Quebec's like surface area,
yeah,
what amount was sitting on Utica Shale. It wasn't. I don't want to speak because I might get it wrong. I know in PA we have kind of two main regions. There's the southwestern area where Marcellus is, and there's northeastern, but it's also in northeastern area, right? That's the
right,
two main areas in PA, and each one's about half. Like about half of our natural gas production is split between those two areas.
right.
Um, I don't recall, it's been a few years we've done this. I don't recall the map of Quebec that shows how much sits on the Utica Shale region. If you're interested, it would be a quick Google search just to see a map of that. But it's
Yeah,
not like it's the entire province.
right. Yeah, I tried to do a quick Google search, and I think I found something, but I was I haven't found the layer yet of like where the shale is, because one of, I guess one the reason why I asked is one of the points of discussion when talking about economics and places that have banned fracking versus places that have not. One of the things that they talk about is, well, Pennsylvania has so much of it that it would have more of an impact on us overall versus, like, for instance, New York or Maryland. Only, like, a certain part of Maryland, actually right below where Pittsburgh is, like Deep Creek area,
Right.
has shale. So, a lot of folks say, well, we can't ban it in Pennsylvania because we have so much of it. But I would think that the numbers would be the same. Do you think that that's a good assumption, that the economics numbers would be the same? Because it's just, it's the same. It's the cost versus the benefit, essentially. Is that
Right. The economics on a per capita basis would be applicable, right? On like on rates per person, right? Or
okay?
like a percentage of county employment that you might gain. That you could that's what kind of what we do here. We kind of apply
Right.
like what our numbers were as a fraction of ours, and then apply it to what Quebec would have seen. So yeah, you're right, Julian. Like on a per capita per person basis, yeah, I think you can make those comparisons.
Okay. Okay. Cool. And I have a couple other questions, but you might get to them, so I'm going to hold them off till later.
Okay, great. Moving on. So what this slide though shows you though is that there's no guarantee that like accessing the shale in Quebec would have led to a wealth gain. That you would have had to see prices probably be above $4 for natural gas. You know, it, and then the higher the interest rate, the lower the wealth is. And remember, these numbers here too, they would represent a theoretical one-time cash payment, right, to a person. One time, not every year. This is a one-time payment. Now we're assuming this range for prices here of $3 to $5.50. Is that reasonable? Well, if you just kind of look, and this is data from 2010 to 2018, if you look at all these different sub periods for the entire 2010 to 2018 time period, the price averaged $3.72. From 11 to 18, 354, 12 to 18, 339. So in no reasonable sub period was the price ever even above $4. And I got some more recent data here to show you. This is the overall national price of natural gas at the Henry Hub, and it's below $4 during this whole sample up until 2021, where it spiked. Then you get kind of Russia invading Ukraine and oil prices rallying a lot, and that pushed people into natural gas. They drove the price up a lot temporarily and then back down. So long term, you're really not seeing natural gas prices really being over $4 for any reasonable period of time. So if it truly does cost $4 to extract it, then it really doesn't become that profitable to do it in many time periods. It was above $4 for a while, but see around 2014 it got below $4, and that's when it kind of became less profitable to do so much fracking. I have one more graph in a moment, but so recall those estimated wealth gains, like I said, they represent a one-time payment per person. So even if you take $4,000 as a plausible upper bound on the outcomes, in the most optimistic scenario, Quebec's residents would get the equivalent to a one-time cash payment that is less than 10% of annual provincial per capita income. Now, would we all like to get a $4,000 check? Sure, that's great. But it's one payment you get one time. And by the way, you're not actually getting a check. It's just kind of a way to theoretically think about what that natural gas would be worth. About $4,000 per person in a one-time payment. More likely, the actual wealth gain would be either a loss or less than $1,500 per person.
Wow.
And those modest wealth gains and the risk of losses are unlikely to offset the negative aspects of shale gas development, such as environmental degradation, decrease in water quality, the other negative external effects like increased congestion or crime for the residents of Quebec. So we kind of found that like potential wealth loss from not fracking is pretty minimal. Now we have these things called exchange traded funds. Exchange traded funds allow you to invest in a basket of stocks that are all kind of tracking, like a mutual fund, right? As you can kind of trade throughout the day. That's really what this is. And they allow you to kind of track what's happening in the market price of these firms. So these are firms that engage in natural gas drilling. And as you can see, once 2014 hit, the price of a piece of equity in these firms really declined. And that kind of echoes our feeling that the profitability, the net profit of pulling the natural gas out of the ground really dropped off at about 2014, which is kind of not surprising. Yeah. Now, that was just one half of it. The other half we wanted to look at was jobs, lost jobs. This is perhaps the most frequently promoted benefit from fracking advocates. People are often talking about like this hypothetical wealth, but they talk about the jobs. The first studies that came out along these lines were largely pro-industry, and you got to really think critically when you read anything these days. You got to ask yourself who's paying for this, right? Often these studies were funded by the drilling industry itself. Kind of a famous one is this Considine and others in 2009 and again in 2010. They claimed that 44,000 jobs were generated from Pennsylvania shale drilling just in 2009. And these estimates were later soon to be shown to have strong, maybe even implausible pro-industry assumptions built into the model. Here's some of my typos popping up. And I don't want to get into like a deep lit review for you guys here, okay? But a lot of people have studied this stuff, and my colleague and I are part of them too. Hoy and others in 2017, they incorporated much more plausible assumptions, and they estimate that Pennsylvania job growth from shale drilling is only about half of that of the Considine estimate. Others have found mixed results, from modest employment effects to even job losses over longer time periods, like Haggerty and others in 2014. Paredes and others find small positive employment gains of about 71 to 181 county jobs on average for PA drilling counties. Wren and others compare a control group of PA counties with no drilling to one of three treatment groups, those that have 1 to 9 wells drilled, 10 to 89 wells drilled, and 90 plus wells drilled. They found no positive impact at all for either of the smaller well groups, the 1 to 9 or 10 to 89. And the largest counties of drilling, they do find an estimated gain in employment of 1.5% to 3.9%, depending on what data source they use for county employment. Now, and I'll get to our current paper on this at the end of this, what we're kind of finding, our preliminary findings. And what we kind of want to do is or what we did in this paper, is we want to compare New York counties against the PA drilling counties. In New York, a moratorium prevents fracking. It can be illuminating to compare New York counties that sit atop Marcellus shale reserves but are unable to frack with PA counties that do engage in horizontal drilling. Commerec in 2016 conducts such a comparison using data from 2001 to 2013 and estimates that fracking counties experienced 7% total employment gains in the first 3 years of a drilling boom, but these gains decline after 4 years. And by the way, this is a common theme in people who study this. Even when they find an employment gain, it is often modest, and after about 4 years, it goes away. Hastings and others in 2015, another siren goes by, they estimate that New York's fracking ban lowered employment by about 400 jobs per county in New York. Cosgrove and others estimate total employment change for New York and PA border counties. They find no statistically meaningful gains in county employment from shale drilling. All these economists have different methods, different techniques, different ways of approaching it, and they sometimes get conflicting results, right? Economists are always arguing with each other about everything. So but often it's modest gains if you find any, and often it's temporary, okay? So collectively, these comparison studies find much smaller potential job gains in New York from fracking than the results promoted by many pro-drilling advocates, particularly this one, the Public Policy Institute of New York State, the PPI. They predicted total job generation of over 62,000 jobs from Marcellus shale development for the 5 New York border counties outside of the city. Based on the study cited above, that would have been hugely unlikely. It would have taken some really implausible assumptions to get that 62,000 number. Now, in this paper, we conducted our own comparison between a 5-county potential shale gas region in New York State against the core drilling region of northeastern PA. 51.2% of all wells drilled came from these 7 northeastern PA counties, and the rest came from a cluster here in southwest PA. This PA-New York comparison can then inform what we would have reasonably been expected for employment gains from Quebec's Utica Shale region should fracking have been allowed. To assess the impact from Marcellus drilling upon the northeastern PA region versus the New York region, what we do is, and this gets a little bit, here's this word again, econometrics, right? It's econometrics here, and it's a little bit outside the scope of this presentation. We create a ratio of total employment in the New York area where they would frack to the total employment area in the PA region. It's like a ratio. We put New York area's employment on top of the numerator and PA's in the denominator. So if that ratio is 1, that means each region has the same employment, okay? And what we do is we track that ratio over time, and we test to see if that ratio had a shift in it when fracking came about. And we use a technique pioneered by an economist much smarter than us, Andrews, in 1993 in Econometrica, and the details of the technique are way outside the scope of what we want to do here. So we went, it's like saying, okay, there's this ratio of employment between their region and our region. That ratio is kind of constant. We want to see if there was a shift in that ratio when fracking hit. Did it kind of change PA's employment in the region relative to New York's? Now, we do find that in 2011, the ratio between New York fracking areas employment and PA's did shift down. And that means that like PA County's employment probably did jump relative to New York's in 2011, okay? Now, fracking kind of got ramped up before 2011 in 2007, so it kind of took a while for it to get going. And that's not that uncommon because lots of the initial development of these sites is not even done by residents of your area, right? They're done by people who come in from outside. I work at IUP. I lived in Indiana, PA for a while. I live in Pittsburgh now. I remember in 2008, you just saw a bunch of Oklahoma trucks around the county everywhere. But so it was 2011, we did see that the PA area employment shifted up relative to New York's, okay? So PA counties probably did see a gain in employment relative to the non-fracking New York region. But this gain we found was relatively modest. We estimate that over the entire region, it was about 9,200 jobs, which amounts to about a 3% increase in the employment to population ratio. If you apply that to Quebec's region, it amounts to only a 1% increase in its employment to population ratio. This modest gain, in addition to the minimal potential wealth gains from fracking, leads us to infer that Quebec's fracking ban was indeed a prudent decision. And sometimes these numbers sound big, you get into the thousands, but that's over a very large region. And it's really a kind of a modest increase in the total employment to population ratio that we found. And if you apply, so this is where your question's related. If you apply that number, like apply it to Quebec's region, it will only be a 1% increase in their ratio. To sum all this up, what we set out to do was to find whether or not Quebec's decision to ban fracking was a wise decision economically. We first examined the potential provincial wealth loss and found it to be minimal. It would have taken an unexpectedly large increase in natural gas prices to cause fracking to generate substantial wealth for Quebec citizens. Yes, natural gas prices did rally a lot in 2022, but now they've gone back down where they always were. We next estimated Quebec's potential job losses by comparing employment gains in PA's fracking counties in the northeast corner of the state to New York's counties that sit on the same shale reserves but can't frack. Our model estimated that Quebec's foregone employment would have only been about 1% change in its employment to population ratio. So for all the potential downsides to fracking, we would have said that Quebec would have only gained about a 1% increase in its population ratio, in its employment to population ratio, and about at most would amount to a one-time payment of about $4,500 for its citizens. And that's not free because fracking does have all these other bad outcomes. So it's, in our view, it was prudent that Quebec did indeed ban fracking. Now, as I mentioned a couple of times before, Dr. Yerger and I, David, my friend, we have a current working paper focusing on Pennsylvania. It's currently under review. It's under one round of revise and resubmit at a pretty good peer-reviewed academic journal. What we do in our current work is we're examining Pennsylvania counties' employment. We do all 67 counties that engage in fracking. And then we kind of see what their county employment has done relative to what you would have forecast otherwise. So we take data from 2000 and as far back as we can go, like 1990, all the way up to 2010. And then we generate forecasts that start in 2010 based on what happened in Pennsylvania and the country. and then we see what Pennsylvania county employment actually did, and we see which counties beat forecast and which ones did not beat forecast. What we find is that only the most heavily fracked counties had employment responses that beat forecast, but that this benefit was short-lived, and it usually dissipated once again after 3 to 4 years. And for the full 10-year sample we look at, you really can't say over 10 years they had any net benefit to employment. But you may get a modest, temporary 3 to 4% employment gain that lasts 3 to 4 years, then it kind of goes away. The other counties that frack typically had employment responses that failed to outpace what would have been forecasted had fracking not occurred. So our current research, we're starting to see kind of a common thread, and that is, can you say that fracking generates that it never causes any job increase? Well, no. I mean, somebody has to come set the drill up. Somebody has to come work at it, right? So yes, can't say that no county has ever increased jobs, but we're seeing that the job gains are far less than what the industry finance studies show, that are relatively modest and not permanent, long-lasting jobs. So modest employment gains in the single percentage range that tend to go away after 3 to 4 years. That's what we find here in our state, and we apply that same technique to what Quebec would have seen and said, you know what? Did they lose something from banning fracking? Maybe, but if the benefit was pretty minimal, and when you consider the cost, we found that it was optimal for them to not do that. And that's it. I thank you for your time.
Yeah.
12:41. That's not too bad.
Yeah, that's great. Yeah. Okay, we do have some questions in the chat. Okay, so the first question that I have, I'm going to go ahead and pop it back up on the screen. So, okay, so as I understand it, the U.S. is the largest LNG exporter. Is it even possible for you to assess U.S. job increases in exporting LNG? That's an interesting.
Good question. Yes, we are, and it's fracking has just changed. I mean, it's kind of crazy how much liquid natural gas and even oil now that we pump out of the ground in the U.S. from fracking. Have I estimated this? No. Is it possible to estimate it, to assess it? Yeah, I think so. I think other economists probably have taken a stab at this. I don't know what they're showing yet, but at a national level, could somebody try to estimate how many jobs have been created from exporting natural gas? Yeah, probably. But I'm not going to take a stab as to what that might be, or even who's done that. But that would be interesting to look at.
Yeah. Well, and you'd have to try to parse out which wells are exporting and which wells are not. And from my understanding, there's a lot of export going on. So one of the questions that I had as you were speaking that is sort of relevant with the current discussion about exports is, okay, so if we're exporting it, but we're not seeing a huge job growth and we're not seeing a huge financial benefit, who is financially benefiting the most from this activity?
Well, you would say, well, it's the firms that pump it out of the ground, but we're seeing that their profitability has declined. Right? It has, and I guess what the proponents would say is that fracking has led to more abundant natural gas, and therefore we shifted out of oil, which is a good thing, but I don't know.
Yeah. I don't know if I buy it. Well, and now they're using, they're using it to the ethane to crack and make plastics. So, and that, I don't know. I know that there are some folks that are looking into the economics of that versus, the harms of living near the cracker plant, for instance, and all that's being caused by that. That's a whole nother can of worms, I think, to open up. All right, we have another question. Why? This is from Michelle. Why did you do the math as per person in Quebec. That creates a population variable. Why was that needed, as divided by person makes this look like a much lower number than just total for Quebec? Okay.
Oh yeah, sure. Yeah, so that the idea was that like how many jobs by our estimate like would have been needed or would have been generated in total from pulling that much gas out of the ground. So if
Mm-hmm.
you take that like 9,200 jobs estimate, right? So it's not like we're trying to make it look smaller. It's like we estimate it was 9,200 jobs that PA, like if you take PA relevant to New York, we said, oh, it's 9,200 jobs. So if you want to say, you can use the same number and say Quebec, that area would have been roughly 1,900 new jobs. But Quebec's total population in that area is much larger than PA's total population is in that area. So just to put it in context, we could have left it and said, we estimate that the Quebec region would have had 9,200 more jobs, period. But just to put it in context, we said, well, since they have a higher population in that region, what would that have been on a per person basis? We divide it by the population to get the 1% employment to population ratio.
Yeah, I think that makes sense. I think it puts it in a perspective, for that's a little bit easy to understand. Okay, so there's a follow-up question. Not the job math, but the earnings math. Okay, so
Oh
not
yeah,
the job math, but the earnings math.
yeah. So what's the big decline based on it getting harder to pull out of the gap? Yeah, it's like it was really profitable at first. It's like prices were pretty high. It's kind of basic econ. Prices were fairly high. That time series run I had didn't go back too far. You could see like whether it was above $4 for a while. So there was this big like, hey, there's natural gas in the ground. It's profitable. We set up. It's the big like the first phase, the big extraction phase, where you rush to PA, you get the people up there. It's worth about $6, and you pull it out of the ground for $4, and you get profitable. But then you start pumping that stuff up, and more of that natural gas starts to hit the market, and that starts to cause the price to decline. So it doesn't stay profitable forever, right? Because as that supply starts hitting the market, it makes the price drop. And then it's this basic economic theory. Over the long run, the economic profit starts getting driven down to zero. As long as it's profitable to do it, you're going to get more people coming in to do it. That tends to lower the price. In the long run, the profitability of kind of anything starts to decline. So we expect in long run average profits to be just high enough to induce people to kind of still do it. But if profits get really high, it always rings the dinner bell, and people come in from outside and they start pulling it out of the ground, and then the price is dropping right now. So what we're seeing is kind of a long run average price of about $4 per gallon, or not per metric million British thermal unit. That's a mouthful, and that's really kind of aligned with the long run cost of pulling it out of the ground. And economic theory says over the long run, if markets are working well, they don't always work well, but if they work well, we expect to see the price of something be roughly in line with what it costs to do it. Okay, in the long run. That's kind of what we're seeing. So that's a good question. They're really profitable at first, and that profitability around 2014 started to decline as more people came in. I mean, anecdotally, I was at a conference presenting a paper on a different subject in Houston in 2010. And I mean, there was like business and econ people there, and I had two people find out where I lived at the time. It was Indiana, PA, and just say, "Do you have any land for sale?" It was the gold rush to them. They were rushing out as soon as they could to because it was very profitable then. But then it just
Yeah.
kind of dried up. And it's not that it's so unprofitable now that they don't do it, but you're not seeing like it was before, where
Right.
that you were getting all these firms rushing to the area to pull it out. So that ETF price was really high during that initial run up phase, and now it's just kind of dropped back
Nice. Okay. And so there's another follow-up question. Was the big decline based on it getting harder and harder to pull out the gas?
down. Oh,
Maybe.
that was the one I just answered. I'm sorry.
Yeah.
Yeah.
Okay.
So the big decline in the profitability. Yeah.
Yep.
Um,
Okay. Great.
yeah.
And so, just kind of follow-up question that I have is, so, like Quebec, it sounded like, they did the math, right? They found out that it's not going to be profitable versus how the environmental and health costs, right? So they decided, you know what, we're going to try to put some regulation on it, some strict regulation. And then ultimately, you know what, we're just going to ban it because it's not worth it, which is very, I think very similar to what happened in New York. New York's approach was a little different, or I'm sorry, not New York. New York had a very similar approach with regard to cost of human health, right? But Maryland was different. Maryland said, well, let's, like it's going to cost the communities a lot, and it's going to bring a lot of risk and liability to individuals. And we Right. So, because it's going to bring risk and liability to individuals, then how about we shift that risk and liability to the company that is doing the work? And so the companies were like, no, 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 no. We don't want to be responsible for our mistakes. We don't want to be responsible for the destruction that we create. We should just be able to go ahead and do that. And Maryland pushed back and said, no. Well, guess what? If you're not going to insure, from an insurance standpoint, from an economic standpoint, if you're not going to ensure that individuals in our state are not going to be negatively impacted, then you're not going to be able to do it. And that ultimately, that's the decision that they made. And it's just interesting in the whole context to look to see who's banned fracking versus who hasn't banned fracking. And Pennsylvania hasn't they haven't done that yet. And it's unlikely that they will. And some people say it's because we have so much shale. Well, it's so much more profitable. But I like the way that you broke it down per person, because it kind of puts it in a context of the individual person, and what what the job creation is, or wealth creation is per person. And I think it puts it in a different light than some people have done. So I think my question is, what kind of economic policies would you suggest, as an economics professor, as somebody that does this, what policies would you put in place if you were the person in power in Pennsylvania? What would you do, or what would you suggest that Pennsylvania legislators do, or suggest that they look at?
Well, at the very least, I think that one should look at having them internalize the external cost they're imposing. So, like one option is just the ban. You just say you just can't do it. The other option is, all right, okay, there are some good estimates here that you are imposing a cost on society when you do this.
Right.
And so we will use techniques to estimate what that cost is. And every time you pull natural gas out of the ground, you are taxed an amount equal to that cost. And the idea would be to decrease the amount of the activity to an amount that is aligned with kind of what may be optimal. So that presupposes that you're willing to put up with some amount of fracking, right? It's kind of like smoking. It's like, hey, look, you're imposing a cost on everybody else maybe when you do this. We're not going to ban cigarettes completely, but we're going to tax them to try to decrease the amount that you're doing based on the adverse effects you're putting on others. It's all based on Coase from many years ago. The idea is of internalizing the external effect. The person who's doing something causing the natural effect on others, if you don't want to just ban it, can you at least make them pay for that cost? Because what externalities are so bad, because there's like this outside cost on others that are not even part of maybe the transaction. So it's just, I just live in the area and I've got bad drinking water because they're fracking. So
Right.
The idea is to make them, so at the very least, do it what we call a Pigouvian tax. That is like, from an economist, Arthur Pigou, the idea is like tax them on a per unit basis to have them reduce the amount of it that's happening. But that might not go far enough, right? Because it might just be, no, we just need to ban it. But,
Right.
there are well-meaning intelligent people who can really put forth sound arguments for and against this,
Mm-hmm.
but too many times it just gets wrapped up in industry finance studies that have exaggerated outcomes, and too many concerns get brushed under the rug.
Yeah.
Um, so I think at the very least, I would aim for a per unit tax on the item that's commensurate with the social cost per person they're generating.
Yeah, and I think that all of these numbers also don't really calculate the cost, and I don't, maybe they do. Do they calculate the cost of climate change and the issues that we're having and the long-term issues that we'll have with climate change? Because I know that Pennsylvania actually has a climate policy, and by allowing fracking near people and by allowing fracking to continue, they're actually in violation of their own climate policy. Their climate policy says, hey, we want to reduce greenhouse gases, but yet the fracking is still being allowed everywhere, which is increasing greenhouse gases. And there's, the estimates of that, the industry estimates are, the self-reported estimates are much lower than the actuals, and they're finding this, like, there's all kinds of cool tools you can view out now. There's like satellites, NASA satellites that can see how much methane is
Yeah.
is present, and it's just very interesting to like, I just wonder, like, is that a factor in the math, at the end of the day, right?
Well,
And
yeah, it's so hard. It's some of what we do as economists is some it's quite silly because it's just impossible. We're trying to put numbers on things that are really impossible to put numbers on. You make a good best effort, but it opens up to all these different competing views. And
yeah,
economists have biases too. We come at this, so yeah, I don't know that it's possible to truly. I mean, geez, I mean, the potential long term outcome for climate change is just so catastrophic. Like,
yeah,
how can you even, you know, how
how,
can you
yeah,
even put a value on it, right? But
right.
sure, we tried to do it, but you have to take it all with a big grain of salt.
Yeah, for sure. And it's global. I mean,
Yes.
it's not local, it's global. What I like about your numbers and what I like about your approach is that it has, it really helps people understand the local impact, locally, how much, is the cost versus benefit, which I think is important. It also, one thing that I'm not sure if you looked at, tax incentives. So the oil and gas industry has received lots of tax incentives to produce, and for the cracker plant, I think is a great example of that. Oh, we're going to have, this many jobs are going to be created from the cracker plant, when at the end of the day we found out, no, the jobs that were created are minimal compared to the tax incentives that the industry got to build the plant. It's just,
Yes.
and so if we
Yeah,
put
that
those,
is such a common theme. It's my other kind of thing I dabble in for fun is the sports econ stuff, and you get the same thing. These industry studies about the benefits of a stadium to a local municipality are always so implausibly wild and so overstated. And when you go back and you look at it and you go, actually, it didn't really do that much, did it?
yeah,
I know because it's actually not even open for more than 15 days a year or something.
yeah,
So yeah, it's just over and over again, both from the industry studies with fracking to the industry studies on a new stadium. There are always these crazy estimates that you look back after the fact and you say, no, that actually wasn't the case.
yeah, it's very, very interesting. And I'm sure that like you said, there are like so many factors to consider, right? There's just so many and variables to consider, that, but just to consider this one variable, I think is really important. I think it's important that we're having the discussion because I would hope that policymakers would be looking at these discussions and thinking for themselves, instead of, just hearing what the industry is telling them. So I think the work that you're doing and your colleagues are doing is so important, because we need to understand the cost of fracking, and we need to understand from an economic perspective, who is getting rich off of this, who is acquiring wealth, and who are the jobs, who are getting the jobs,
Right.
gaining the jobs that they're talking about. And like you said, a lot of the first jobs, that come to when fracking comes to someone's town, those are usually out of state jobs. So
Right.
really, it's the other jobs that are created as the time goes on. It might be more local, but this is just a very interesting way to think about it. And I'm really happy that you were able to come today and have this discussion with us. I didn't get bored by the math, and I am not a math person.
Well, thanks,
So
Julian. Yeah, I really enjoyed it.
yeah, I appreciate the discussion. And actually, if we go to on your slides, if we go to the next slide, I think it's the thank you. Perfect. Okay. Thank you so much. So, if you like our Lunch and Learns, we want to make sure we're bringing topics to light of things that are important for folks to think about with regard to fracking and the environment and environmental harm. So our next Lunch and Learn is June 25th. We're going to be talking to Silo Caggiano, but please do our survey, because our survey informs what content we bring forth in the future. So please take a minute to just do like a little quick click with your phone on that QR code and take our survey. And then, Todd, if you wouldn't mind just going to the last slide. So we're going to be talking in June, at the end of June, to Sil Caggiano. He is going to talk about emergency response. He himself is a fire battalion chief and hazmat specialist, and he has responded to disasters around well pads and other environmental disasters. And we're going to talk to him next month. So please come back and join us. And please rewatch this broadcast so you can maybe look at the math again if you didn't quite pick it up. And thank you so much, Dr. Potts, for coming today and for sharing this information with us. I think it's so important, the work you guys are doing. So thank you so much.
You're welcome. My pleasure. Goodbye, everyone.
Bye, everyone. Have a good day.